has gone from a fast casual concept to one of the strongest corporate credit stories in the entire QSR category. $10 billion in revenue, investment grade S&P BBB rating, $3 million plus in average annual sales per location, and a drive-through expansion program called Chipotle that's driving a real wave of new NNN inventory. Here's what a Chipotle NNN investment looks like. Chipotle NNN properties trade at 5% to 5.75% cap rates, comparable to drive-through Starbucks and tighter than most QSR franchisee deals. Buildings are 2,200 to 2,500 square feet, small relative to the cap rate, but the per square foot sales are exceptional. Entry prices run $2.5 million to $5 million. Lease terms are 15 years initial with 4 5-year renewal options. S&P credit is BBB plus, Moody's Ba2, solid investment grade. Chipotle is one of the few QSR chains that's 100% corporate owned and operated, no franchisees, which means every Chipotle NNN deal carries the same parent company guarantee. Chipotle's investment case in NNN real estate is straightforward. Best performing QSR in the category on a per unit basis, investment grade credit, corporate only operations, eliminating franchisee risk, and an active Chipotle drive-through BTS program creating new inventory. Chipotle's average unit volume of $3 million plus is at the high end of the QSR category, above average Taco Bell, Wendy's, and most burger chains. That revenue performance means these locations are sticky and valuable to the tenant. The Chipotle format, a pickup-only drive-through lane adjacent to the dining room, has boosted digital sales and is now the standard prototype for new locations. Chipotle leases are typically NNN or ground lease configurations with 15-year initial terms and rent bumps of 7% to 12% every 5 years. Corporate guarantee from Chipotle Mexican Grill Inc., the NYSE listed parent. The Chipotle configurations tend to have slightly different site requirements than traditional inline Chipotle locations. You want the drive-through pickup lane format for the strongest investment profile. Always verify whether you're buying a Chipotle deal or an end cap deal, as the operational profile and releasing utility differ. 3 things to watch with Chipotle. First, the building is small, 1,200 to 1,500 square feet, which limits releasing to QSR and fast casual concepts if Chipotle ever exited. This isn't a major concern given Chipotle's credit and unit performance, but understand your releasing universe. Second, Chipotle has had well-publicized food safety incidents in the past, norovirus outbreaks in 2015 and E. coli incidents before that. The company has significantly improved its food safety protocols since then, but it's a tenant-specific risk that doesn't apply to pharmacy or auto parts. Monitor the company's food safety track record. Third, verify Chipotle versus NCAP configuration. A Chipotle location is a categorically stronger investment than an NCAP in a shopping center. Chipotle NNN is one of the cleanest stories in fast casual net lease. Investment grade credit, corporate operations, and an active drive-through BTS program. I'm Ryan Solberg with MaxLife Commercial. If you're looking for Chipotle NNN properties in Florida, reach out. Visit maxlifedevelopment.com or call 321-586-2121.